50, you claim 50% of it as subject to FBT, and you get the tax deduction and the GST credits, and 50% where you're not able to claim the tax deduction or the GST credits for the meal entertainment. But where you do have the minor benefit and you are applying it for example, let's say the actual method for meal entertainment, then you do have to just consider what does that mean from an overall tax position. So whilst you aren't paying FBT on it, you're not claiming a tax deduction or not getting the GST credits on those benefits as well. What we were talking about before, otherwise deductible rule, a deduction that the employee would have been entitled to claim the amount as an income tax deduction. So where we were talking about that computer, it's not otherwise deductible because you're not able to claim a tax deduction, you'd be able to claim depreciation. So because you can't claim it as an outright income tax deduction, then the otherwise deductible rule doesn't apply. He'd be able to claim a depreciation. So it just depends on what the limit is in terms of what you're able to claim as a tax deduction in your personal name. So if you're able to claim it, all of it, then it would be otherwise deductible. But if you need to depreciate it, then the otherwise deductible rule doesn't apply because you can't claim an outright tax deduction for it. Yeah. Yeah. So that's the major, the minor benefit exemption that can apply for different buckets of things. So you've got entertainment, it could apply for gifts. It's quite generally a purpose available for a lot of things. The only comment I will make is where you are doing the actual method for meal entertainment, if you are looking at using the minor benefit, the ATO does require for each event the names of each of the attendees that have attended. So that's the problem with the record keeping around some of these records and lunches that people go to, is that record keeping. I've just got a couple of slides in here around the for-purpose entities, more as a reference if you do have some not-for-profit clients or rebatable employers, reminding about the grossed up benefits that employees can receive as part of the organisation, and just some comments there around the observations that I see as part of the rebate. So I'll leave them for you to have a look at. If you have any clients, salary package, meal entertainment and entertainment facility leasing, they get an additional $5,000. And these are some examples. Okay, and so the last comment, sorry.
Got a question online. For minor benefit, how would you define infrequent and irregular?
How long is a piece of string? The unfortunate bit as part of that tax ruling is that the ATO hasn't given us any guidance, and so it is back to the risk profile of the organisation. And that's where I said that some organisations will go, well, we have a $300 limit. We're going to apply that $100 and there's 20 times, so that's what we're comfortable with. Some organisations might be getting close to the $300. They might say, look, we're comfortable with 10 times a year, and they're close to the $300. So it's really back to a full purpose around what the entertainment spend is at the organisation. Important, I believe I said this last year, the amendment periods. If there is no FBT payable, I do suggest that you should lodge an FBT return. Why you should do that, that allows the ability for the ATO to only go back 6 years. So if for some reason there is a benefit that you have been providing in an organisation and you haven't been aware of it, and you haven't registered for FBT, the ATO can go back unlimited. Whereas if you have registered, lodged and said nil, then you've got a 6-year period. So that's where I would say if you are registered, it's a good thing, and I would just lodge that nil return if there is no benefits. And the ATO aren't happy with adjustments in the current year for last year, so it's an amendment. We've been pushing around where you do have a number of organisations in a structure, whether that consolidated FBT return, that's never, I think, will get up. It's really around where you have an entity that is an employing entity. They need to lodge an FBT return if they are providing benefits.
Equal if, sorry, the employee contributions equal the FBT amount.
So that's where it comes back to that comment where even if it is the taxable value less employee contributions equals nil, if it was me, I'd be lodging a nil return on the basis that you are then capturing only a 6-year period. If you have no other benefits and you're comfortable that the organisation isn't providing any other benefits, then you might not want to register. But yeah, I think it's a good practice to kind of go in to lodge that as taxable value, less employee contributions, net zero. Car parking. Okay, so what I recommend doing is identifying if there are locations. The rules have changed and it is applicable for this year. So it's really identifying any locations that you're allowing employees to park, checking if employees are parking there. Was there a liability at the start of the year? How's the car park being used? And then work through how we're going to calculate the benefit. But it's not reportable. So the good news to start with. So if it is parking for a motorbike, you don't need to worry about it. If it's a non-car where it's over 1 tonne, you don't need to worry about it. Or if it's an exempt car, you don't need to worry about it. Now, if you are a not-for-profit, again, you don't need to worry about it either. If it's parking for a disabled person, you don't need to worry about it either. And the main one on that slide is where you are a small business and your turnover is less than 50 million and it's not at a commercial car park, then that's also exempt. So that's the main one that will take most people out, is where you have got the aggregated turnover less than 50 mil, but it is important that it is that it's not at a commercial car park. So if you are less than 50 mil and you are at a commercial car park, then you still have a car parking fringe benefit.
I get ready for privately with a private person, as opposed to renting a space.
So by you renting it out, are you the employer?
No, I'm renting. You know how there are services.
Yes.
Two people say who have a apartment in the city,
in
a parking space. So if I were to rent a car parking space from an individual, as opposed to, from a car parking operator, then presumably that would be okay.
So when you say you, are you talking about you as the employer?
I say employer, yeah.
Yep. It will then determine whether in that car park potentially it could still be considered a commercial car park.
Okay.
So if it's like a Wilson or if it's like identified, and I'll cover that.
Yeah.
But if it's still a commercial car park, still within 1K of your office, then it still might be.
Okay.
Because you're controlling and you've kind of leased that premises.
Yeah. Okay.
So what happened if there's in the city, right? There's a fair bit of residential property that you know, I think that's what William was saying. There's there's a lot of them that doesn't really have a car, and then they rent this for $50, maybe it's too cheap, but like $500 a month or something to a third party. And you know, is in a residential premises. Does those ones count? Like, for example, good example would be Wells Square, I think, have both commercial and private at the same time.
So you probably need to look at the characteristics of the car park in question and see if it displays any characteristics associated with commercial car parks.
Yes.
If there are boom gates, if there are like method of charging, controlled access, whereas, you know, if it's just someone's car park attached to a residential apartment, probably you wouldn't see much of that. So you don't have the ability to pay per entry sort of thing.
Yeah. And I mean, it's a good point. During COVID, we did see organisations cut leases, cut the car parking as well. And so because we're trying to get more people coming back into the city, there are organisations saying, look, we'll reimburse your car parking. So is that a car parking fringe benefit? No. So that's important. So if we are reimbursing as an employer, and that's why I asked, are you an employer? So in terms of if I, as an employer, reimburse, then I am back into expense payment, fringe benefits. I'm not into car parking because I, as an employer, haven't organised that leasing and not in control of the premises that the car is being parked at.
Got a question online. Is this the car park available being commercial where the cars are actually parking on the street at the office? I'm not quite understanding that question.
Look, I can try and cover, I'm going to cover off what a commercial car park is if I don't answer the question.
Is this the car park available being commercial where the cars are actually parking on the street at the office? So you park on the street, I suppose.
Yeah, so it's not. No, so I'm talking, so I guess what I'm talking about is just on a commercial car park. If you're parking on the street, I imagine that's meter parking, which isn't controlled. So for a car parking to exist, it needs to be parked at the premises that are owned, leased, or otherwise under the control of the employer. And that's where parking on the side street, you're not under the control of the employer. And so where you're looking at is all-day parking within 1K of the facility. And so it's got to offer continuous period of at least 6 hours between 7 a.m. and 7 p.m. And so where you have an employee that's parked for more than 4 hours, then that will generate a car parking fringe benefit. So if you've got an employee that comes in, parks for 3 hours and then goes off on site, then that won't be a fringe benefit for the day. So it's got to be parking for 4 hours that constitute a car parking benefit for the day. So this is the commercial car park. So the guidance the ATO released in November was where the car park has multiple purposes, like what we were saying about potentially commercial and residential, potentially also those medicos or medical facilities or hospitals, where it has dual purposes. As long as one of those purposes is for parking, then it will still be considered a commercial car park. So where you do have those penalty rates, you still will be a commercial car park. And so the ATO has updated the guidance to address all of that, to make sure that everyone's understands that shopping centres, hospitals, hotels, wherever you're parking, it would constitute a commercial car park following the Qantas decision. This is what we were speaking about earlier. So these are, so if it's a commercial car park, so if it's a Wilson secure parking, then that's quite clear that it's a commercial car park. If it isn't, then these are the tests that need to be applied. So if 2 or more of them are satisfied, then it will be a commercial car park. So if it's clear visage that it's paid parking is available, if you've got boom gate or pay and display, or if there is a nominal fee. So if 2 of those 3, then it will be a commercial car park. 3 out of 3 included, yes. Still in. Still in. There are a number of arrangements where I think there's a lot of sites coming up, and you mentioned, Henry, around the residential parking in Sydney in the CBD. There's also different, I think there's building sites where it's all very temporary, offering parking, just come in and park. The ATO have said that wouldn't be considered a commercial car park because it's not permanent, it's only temporary. So again, it's just understanding wherever you're providing car parking to employees, is there a commercial car park within that 1 kilometre? Do you need to worry about car parking? And if you do, then you just need to work out how to value it. And this is what the ATO addresses in that tax ruling, to say that you can't use a rate that, for example, provides longer term parking and that you can't go in and out on a daily basis. That won't be able to use that rate. And if it's not available to the public each day, you can't use that rate either. Any other questions on car parking? But typically, good news, if it's not near a commercial car park, we're okay. If we're at a commercial car park, it's then working out, well, how do we minimize that? How do we work out, well, what's the average cost? What's the cheapest one? It's also important to know that you don't need to use the same car park at the start of the year and at the end of the year. You can use a variation of rates to get the cheapest one. Cars. So this is where the ATO is focusing on in terms of audit activity. They're focused around motor vehicles. Are they being used for tool of trade vehicles? And what is their pattern of use? So we all know motor vehicle, less than 1 tonne, designed to carry less than 9 passengers. And our exemptions, and so the 2 there bold that I've had highlighted are the 2 that are where the ATO are focusing. So we've got a ute that's designed to carry less than 1 tonne, or it's less than 1 tonne, not principally designed to carry passengers, and it's exempt if its private use is limited and private travel is minor and infrequent. So those are the 2 instances that we're seeing that the ATO is looking at from an audit perspective. Because once that private travel is more than minor and infrequent, then the car is subject to FBT. And so if the car is subject to FBT, presumably if you haven't got a logbook, then the employer is stuck with the statutory formula to calculate the car as well. Okay, so electric vehicles. So nothing's changed from when it was first released. So we've still got the 1 July 22 when it was announced. Still important is around that, making sure that no luxury car tax is paid. So as we're seeing the second-hand vehicles being purchased more and more around the electric vehicles, what we do need to be mindful of is that when a second-hand car is purchased, is just doing the due diligence to make sure that when that vehicle has been paid originally, that there was no luxury car tax paid. And so the ATO is looking at, well, is there ways there of looking at, well, when was it first sourced? What was that value back when it was sourced, to work out, well, what would that original cost be? And so would that be less than the value? Important to note that as legislated, the plug-in hybrids, we've still got that sunset clause. So from 1 April 2025, the plug-in hybrids will no longer be eligible for FBT exemption unless we have a financial commitment in place. And so just important around making sure that do you have that financial commitment to be able to continue leasing that. And I think I've got that on the next slide. Yeah, so if you have an extension of the arrangement, then that won't be considered binding. Or if you change the employee changes employer, that will also change the novated lease. So therefore that will still won't be considered a financial binding commitment. Just some examples there, and I'll leave that for you to have a look at. Really just making sure that the first time the car was both held and used was just to make sure that it satisfies that it was after 1 July 22 and what the value was. Yeah, so if you buy a second-hand vehicle for 70, but the original owner acquired it for 100, then you will not qualify for the exemption. There's been confirmation back and forth around the ATO around what is included as associated car expenses as part of the EV exemption. So the ATO is comfortable and have come out to say that these will all be exempt as part of the EV exemption. The bit they haven't is the home charging station. So if as an organisation you say we'll pay for a home charging station to the employee, then you will be saying, well, that's a property fringe benefit. So that's not exempt from fringe benefits. And if you're reimbursing the employee, then it will be an expense payment fringe benefit for the cost of the home charging. For the EVs, there's been a PCG released around what the home charging rate would be for electricity. And so that's a shortcut method. You're not obligated to use it, but again, it's helpful to be able to work out, well, how many kilometres has the car travelled? And then you can use that shortcut rate to be able to work out, well, how much electricity was used, so that it can apply for income tax and FBT, but it doesn't apply to plug-in hybrids. We still don't know how to calculate what that looks like. And so that election, it doesn't need to be formally made. It's considered as part of the FBT return when lodged. And again, it can differ like we do for a number of benefits. It can be on a car-by-car basis. And so as part of that PCG, the employer is not going to incur any FBT by reimbursing employees. So the ATO has come out to say, if this is how you've used the shortcut method or calculated to work out how much to reimburse the employee as part of the electricity cost, then that will be exempt. Just a disclaimer here, I'm not I'm not working for the EV industry. But again, there is opportunities there and savings around electric vehicle versus a petrol car if you were looking at salary packaging. Okay, so this is the tricky bit with the reportable. So if you do have an electric car and so we don't have a logbook, 20%, so our reportable fringe benefit would be 26,000. Now, as an employer, you're going, okay, well, the easiest way for me to report that is 26,000. as an employee, if you have other benefits or other entitlements that are going to impact you, then you want the lesser amount. So that might mean that you might keep a logbook to reduce the cost. Again, it's not in the interest of the employer, it's in the interest of the employee to be able to maintain that logbook to say, well, actually, when you're calculating my reportable fringe benefit, here is my logbook. So please calculate the car using my logbook.
Sorry, I got a question online. What if the EV is provided by the employer, not by way of a novated lease option, but as a company car that allows private use of the EV?
Yep, that's fine.
Yep. A second question is that, one of those Ram 250 or 150 or whatever they call, one of those big ute, can that be exempt for FBT purposes if most of the use are for the business? It's one of those luxury big American ute.
So can it be exempt? Well, so it needs to.
If its majority of the use is for business purposes.
Okay. And it satisfies that it's
Well, it's actually a petrol car. I know one of those, but it's one of those big American ute where they tow a lot of capacity. A lot of them.
I don't know what the capacity limit is. Like, are we saying it's less than 1 ton? What more?
I think it carry like 3.5 tons. The car,
Okay.
one of those one is like 150K each.
Right. Okay. So then it's not a car fringe benefit.
Yeah, because
Yes. It's not a car fringe benefit. Yeah. Yeah. Well,
It's still
the fringe benefits though, because vehicles that are greater than 1 ton aren't car fringe benefits.
are they used right?
Yes. Yes. Correct. But yes, that's the disclaimer I'll have there, but may fall under the residual benefits. And so how you calculate the private usage of that might need to be taken into account. So that's the point I wanted to make there. So it's no incentive for the employer to reduce the FBT because there's no FBT. It's back on the employee. So dual cab. So this is where we're talking about the load greater than 1 ton. We have the MT 2024. I'm not sure whether that car falls onto it. So provided all that private travel is home to work or work to home, then it will be an exempt vehicle. And so where that exempt is provided that the travel is only those or it's minor, infrequent and irregular, then that's okay as well. But where you have, so the dual cab, there's also that extra concession in the practice PCG, where if it's a non-salaried packaged vehicle, so you've got an eligible dual cab, so the employer has a policy that says we're going to limit private use and we have it less than the luxury car limit, we need to make sure that we have a policy in place that says these are the concessions, those 3 that I've listed there. That travel between home and work, your diversion's only 2K, no more than 1,000 Ks in a year for private travel, and no single return journey is exceeding 200K. So that is, as long as we have that policy in place as an organisation, it's not salary package, so we're giving the car as available for use, then that will be exempt as well. The distinction that we have there is non-salary package. The tax office has that concession for private use. Where you do have a salary package vehicle, the use can only be home to work or it can only be work related. So that's where the ATO is focusing, where you have those dual cab salary packaged, and you're saying that there's no private travel. And so potentially there is private travel, and so therefore there potentially could be FBT. I just wanted to quickly touch on self-education expenses. So there was a draft ATO ruling on self-education. So where you have an employer paying expenses, so you have retraining and a reskilling exemption under 58ZE. So if you are looking at making people redundant, then you can potentially use that to reskill them. You have the minor benefit exemption under 58P if it's less than $300. You've got your otherwise deductible rule if you've got the signed declaration. And so the ATO has come out with this draft ruling on the deductibility of self-education costs. In a nutshell, in my opinion, what the ATO is focusing more on is those more general post-education courses like an MBA. And that's one of the ones that they have mentioned in there, is that is an MBA too broad for it to be able to help provide that skill for the next promotion. And so what the draft ruling is proposing is that that course or whatever that education cost that you're paying as an employer has to have a direct connection with the work that the employee is doing. And so if it's based on that exercise of the skill or that specific knowledge, then that education expense will be deductible. But if it's too loose or it's too general, then that's where I can see that the ATO may be looking into. So I think a lot of it is around those broader MBAs. And so if you are doing that, then it's looking at, well, is that too general? And should you be looking at your policy in greater detail?
There's one question online. How do you differentiate between salary package and non-salary package for the vehicle?
Oh, so a salary package is part of the employees package. So salary, they have a novated arrangement so that they've novated that car, and that's all part of that salary packaging arrangement. So I think for this one, it's really just a watch and see what the draft becomes final. But I think, yes, the days of the MBA and paying that might be. Yeah. Well, I mean, we're already focusing on that HECS help and, you know, that uni, and just making sure that we're not paying any of that fee help anymore, because that would be subject to FBT. So it's really like, it's still saying in that ruling, the draft ruling, that if you're paying those, the course fees and all of that is still fine, and making sure that, so if an employee goes and takes out a loan, but then you as an employer pay part of the course and that goes and pays for that part of that course, then that still is fine. It's just making sure what you as an employer are paying. Correct. Yes. But then if it's part of that loan and you're getting that loan, then it's not deductible. I don't plan to cover this in great detail. So this is where I have the, are you traveling for business? Are you relocating? Are you living at a new location? I have the slides there and you will get them. I've purely got this in for two, I think I'll talk through 3 slides. When are deductions allowed for transport expenses? So if an employee is travelling to work, the journey occurs outside of that income producing activity. So it's outside and it's private, not deductible. So if you're travelling to work, not deductible. However, if you are travelling on work during that journey, that cost is deductible. So if you're travelling between home to your regular place of work, not deductible. But if you are travelling between work locations, then it's deductible if you don't have, if this isn't one of your homes. And so the distinction here is around, we had the John Holland case, and now we have the Bechtel decision. And so in the Bechtel decision, the important distinction there, and I'm not going into it, this is the only slide I've got on Bechtel, is really around whether those costs, whether you've, paying for people to travel on business, or are you? So in this case, it was different to John Holland. So John Holland was saying that the employees, as soon as they got to the airport, they were flying on business time. And so therefore, if they had a misconduct, then it was reprimanded. Whereas for Bechtel's decision, it went all the way to the full federal court, and they decided that it was too soon for the travel. So that travel to get to Curtis Island was personal. So therefore, they then, Bechtel needed to pay FBT on the travel costs for those FIFO employees travelling to Curtis Island.
Okay, there's one following up to the MBA course. What about the senior executive that is part of the leadership team of the organisation does an MBA course?
Yes, so I guess that's going to be, for me, if I was suggesting, I would be making sure that there's a study there to say, or a paper to say that that's the reason why you're doing that, is that, and linking that back to the senior executive's role, position, and what the courses are, particularly in relation to that MBA. And these are the courses under the MBA, and that's why it's relevant to that senior executive's position. Bearing in mind it's still only draft. Well, it comes back to otherwise deductible. Yes. So I'm not going to go into any of these slides for the purposes of time, but they're all there. Traveling on work, living away from home, has the employee relocated. So there's all those slides for you. Okay, some good stuff. Exempt benefits. We've spoken a little bit already about the minor benefits under 58P. We have the work-related items under 58X, talking about our laptops or anything that is significantly different to be able to get the deduction there. These are the other types of benefits. So membership fees we were talking about earlier. So under 58Y, we can get that. I think Qantas Lounge is also, I think, under 58, or Virgin Airline lounges, I think, are under that as well. We've got some there with our motor vehicle parking that I spoke through earlier. So that's all of the exemptions there. And I'll cover long service and safety in a moment. We have, so coming out of COVID, we still have those work-related, particularly around that work-related preventative healthcare under 58MI1, that is relevant, where there are potentially some benefits there that could be exempt. And as I'd mentioned before, the retraining and reskilling, there's the exemption there. So the only comment I'll make here that's in addition to the minor benefit is around that it doesn't apply if we've got in-house. I haven't spoken about in-house today. Meal entertainment when you're using 50-50 or under a salary sacrifice arrangement. So that's the other considerations as part of minor benefit. We have the long service award. So you've got the equation there. And so if the amount exceeds the equation, then the whole amount is taxable. So you can't just kind of go, oh, 3,000, I'll take out 1,500, I'll then pay FBT on 1,500. It's on the whole amount if you exceed the limit. You've got the safety awards, and then you've got the in-house benefits, which is a topic to itself. Got on, yes, potentially. If it's under that amount, if it's over, Rolex, your FBT. Yes, well and truly.
Sorry, quick question. What do you think is the correct way to disclose these exempt FBT benefits on the return form? Do you just not include it at all to begin with, or do you include it and then you reduce the amount of taxable value?
I'm more for your latter approach. I think it depends a lot around the software that you use as well. But for me, I kind of have everything in, use the exemptions and the reductions, and then have your taxable value there.
Right. But for some reason, the form doesn't allow value of reductions for cars. So in that case, if it's an exempt EV, for example, you just wouldn't include it at all.
Yes, I think that's one that we were talking about in the subcommittee, is that it's hard. So as we're talking about this FBT gap in estimate of what hypothetical FBT tax is being paid, because we don't know how much exempt EVs there are because it's not being reported on the FBT return, there is that significant gap between what we think we should be paying versus what the organisations are actually paying. So this, yes, so that's right. So from an EV perspective, you can't put that on, correct. But all the other benefits, you'd be able to have that value reduction to then get to the net value. So where's the ATO is still historical in numbers. So they've estimated the gap for 21 was 1.2 billion in FBT, and so that has ATO estimated that employees only paid approximately 72% of the hypothetical tax, and so that was down from 79% from the year before. So they believe that a lot of employers aren't participating in the FBT system. And so their major, how they've kind of concluded about this data is the lack of awareness around FBT, around how you calculate FBT, how you report it, how complicated it is. We only use it once a year, just all the exemptions. It's all very complicated. And so that's where they're saying that a third of the FBT adjustments result from a lack of awareness. Correct. And so in some of these examples I'll talk through, it's around those small businesses, it's around those cars, it's around those potentially exempt vehicles that were used privately. So therefore they are now subject to FBT. We don't have a logbook. They're now statutory formula. We might now have an FBT bill for $20,000. Correct. And I mean, there's so many logbooks that are free around the market at the moment as well. And it's, you kind of keep it for 12 weeks and you've hopefully got it for 5 years if your pattern of change, pattern of use doesn't change by more than 10%. Correct. Agree. So what we are seeing is that through SDP, they are having more data And so they are using it. So if the employer hasn't lodged an FBT return, or they've reported employee contributions in the tax return, or they have reportable fringe benefits in the payment summary, then they're just kind of linking everything together. So if they've got reportable fringe benefits, but they haven't got motor vehicle expenses in the tax return, why is that not happening? So they'll have that questions asked. These are the concerns from the ATO around the compliance on FBT. So cars are purchased by employers, but aren't being disclosed. And again, around that private usage, business usage, logbooks, and really around that potentially incorrect calculations. Some myths there. So the ATO don't conduct audits. Not true. Utes aren't exempt. Utes are exempt from FBT. Not true. Logbooks are not necessary. A logbook is a set and forget. So we are aware that the ATO is conducting audits. Utes can be exempt, but we need to follow rules and make sure that the private use is minor, and that logbooks we do need to keep. It's amazing to see, and I have a few last looking at some logbooks where that home to work and employees just put that's work, when really it's home, it's personal, not business, even though they think it might be. And so that then just, upsets the business use percentage.
Just got a question online. Can FBT be calculated on own vehicles, or the car needs to be provided by the companies?
So, sorry.
Can FBT be calculated on a employee's own vehicle, or can the vehicle, or the vehicle needs to be provided by the company?
Well, you're paying FBT only on a owner car. If you're using your personal car, you are kind of, seeking reimbursement on a cents per kilometre basis, but you're not paying FBT for an owner, for your own car. And so this was an example from the ATO. So it was a compliance where they had some dual cab utes. They'd claimed motor vehicles in the tax return. They hadn't lodged any FBT returns, and they didn't have any employee contributions reported. The ATO reviewed that, and they said, well, the dual cab utes were used privately. So therefore, because you don't have a logbook, we're going to apply 20% statutory formula. And so therefore they had to pay that. We have seen in an instance where cooperation with audits as well. So there's been 2 instances that I'm aware of where if they've complied, the employer's complied, then there's been no penalty. But if an employer hasn't complied with the request from the ATO, they've been hit with a 75% penalty on top of the tax. Yes. This is just more examples of what the ATO is looking at around it. It's really a lot is around the cars and how those employee contributions are working at the moment is the latest. We do have the declarations, and so just making sure that you do have the declarations just to make sure that you have them signed before lodgement of the FBT return. If you are using, for example, the no private use declaration, living away from home. So here's all the declarations. So you'll get all them and the links just to make sure that you do have them signed and located before. And that takes us to the end of the FBT. update. If there's anything else online, I'm happy to answer any questions, but normally I talk about payroll tax, but I'm all out on FBT today.
Okay, any other question on the floor? If not, then on behalf of the City Taxation Discussion Group, Henry and I would like to thank you, Katie, for your time, effort and contribution. And the presentation is always informative, very practical and very interactive. I suppose everyone asking questions, a lot of questions around FBT, I suppose. If any one of you have any further questions, you can send email directly to Katie, or if you're on the floor, you can just, Katie will stick around for a little while, and if you want to ask further questions. So if not, thank you very much for your time. Thank you very much for coming, and we hope to see you all back again in 2 weeks' time in our online Zoom webinar.